Hello, investors and traders, and welcome to the weekly market report. I'm AJMonte, Chief Technical Analyst with Sticky Trades, and I hope you had a chance to watch the midweek report. Normally, that is a member-only service, but we opened that up to the public to give you a little taste of what we do here at Sticky Trades with regard to forecasting the market. So on Wednesday, I said we could probably go up. On Thursday, I forecasted that the VIX would go a little bit lower and then start to rip higher. I also mentioned last night on our equity analysis call that there was a good chance that the UAW was going to go on strike and that they would shut down 3 plants. Did that forecast. That's exactly what happened. And the markets gave almost everything that it had gained on Thursday. Now let's go to the charts. Stay tuned to the very end here because I have big announcements for you with regard to how we're handling the YouTube channel. All right, so here's the diamonds. I have my downside target right there at 343.98. That is not changing. Again, I mentioned that on Wednesday, so that is in place. Look, we have a cross down below the zero line on the CCI. That means that for the next 2 to 4 days, we're probably going to head lower. And now let's take a look at IWM. We hit the downside target, and I said we could probably go lower. We're on that track right now. I'm going to forecast next week that we're going to go lower. I'm being conservative here, by the way, because if you had a chance to watch the YouTube video 2 weeks ago with regard to what I'm forecasting next week, I said that we could possibly see an event that would resemble a Black Monday type of an event. Go back to that week's recording at timeline 15 minutes and 20 seconds so you could hear exactly what I said. I don't want anyone to misinterpret what I said about next Monday, the 18th. All right, so that's IWM. I think we're going lower. 181.78 is my price target. Going right into the Qs as we go alphabetical order. You can see that my downside target here has almost been hit. I think it will hit next week. 367.47. Look down below. We have a cross of that momentum line again. I think that we will most likely surpass that 367.47 target, but stay tuned. I'm going to give you another update next Wednesday to see how the volatility is panning out for us after this options expiration Friday. Looking at SPY, we are again right on track for hitting that downside target of 440.85. Look at the close below that 20-period moving average. Now that's significant because the last time we had a close below the 20-period moving average was back here in July, and you could see what happened after we broke out below that moving average. You could see that the moving average had been acting as a support level back here early this month, and the role reversal is now intact. Once support is broken, it then turns to resistance, and that will make it very difficult for SPY to get back on track. So again, as the volume is increasing on the way down, that is bearish. I do think that we're going to surpass that downside target, but I'm keeping it in place in a conservative target right there at 440.85. Now let's go to the VIX. Had a forecast come out on this one saying that the gap would fill. The gap has filled. On Wednesday, I said I thought the VIX could go lower. It did that. Now look what we have right there. The VIX is showing a bullish engulfing candle as the CCI down below is crossing with a buy signal. So my upside target on VIX is right there at 1586. Again, I have that as a conservative upside target for the VIX, and I think it could go much higher. Now, before we get into the geopolitical news, I want to let you know what we're doing on YouTube. I'm going to be making regular comments on the comment field, and I'll be pinning that to the top of the page. And so if you hit the notification bell after you've subscribed, then I will be adding notes to my own comment during the week if anything changes, and then you will be notified. You can get a text message on your cell phone with my notes, and then all you have to do is click on it and see my commentary. So that's going to be very exciting. It's a new change. It's an improvement. We're constantly looking for ways to add value. And with that, let's go right to the geopolitical news. Remember, like, share, and subscribe, and you won't skip a beat. Now, Bloomberg came out showing the smart money flow index. You could see here that the money is flowing out. All right, we got money flowing out of the market. The Dow is following that, but it's lagging the money flow at this particular point in time. And as I mentioned, you have to follow the trends. If the money is coming out of the market, remember, that's what I was talking about regarding next week. We have estimated taxes being paid today. People are moving money out of their bank account. They're moving money out of the market. The Dow will most likely follow because money flow is a leading indicator. It's not a lagging indicator. So keep an eye on that. As I mentioned, the UAW strike is on, and Bloomberg again announced this today, that a 10-day work stoppage would reduce the U.S. GDP by $5.6 billion. So this is not something to take lightly. This is a historic strike because what we're seeing here has never happened before, where 3 plants simultaneously are striking. You have the transmission assembly plants could actually shut down all automotive production because without the transmissions, the cars don't roll. Keep an eye on this story as it develops. They have enough money in the strike fund to keep this going a lot longer than 10 days. So that's going to be significant. Here's another one. Auto and truck consumers are pulling out of the market. And you can see that we're down at levels approaching last September. And this is also significant because it's more or less how the money flow works. This is a leading indicator to what we could see happening in the economy. Another thing I said 2 weeks ago is, I said, as Apple goes, so goes the market. This is, again, another significant development here because if you go back to 2012, there were only 2 years where we had a drop from the previous year. Only 2 years, 2013, 2016. And here, again, we're not over with 2023, so this could be even worse than what is being announced right here on this particular report. Now, another interesting bit of information, Walmart is cutting the starting pay for some new hires. They say, and as they spin the story, that it's a move to improve staffing, but others see it as a response to rising labor costs. And the UAW strike is an example of what's happening in Walmart. As the union strives to get higher pay and more benefits, who's ultimately going to pay the cost of that? Well, it's going to be the end-line consumer. You buying a new car, they're going to bake that into the price, and that's what happens. If Walmart is suffering rising labor costs, guess who pays that bill? We do when you go shopping at Walmart. Here's another bit of information I find very interesting. Again, it's coming from ABC News. Georgia Governor Kemp is declaring a state of emergency over inflation. Well, that's interesting because the Fed seems to think we have inflation under control. We don't. That's a big fat lie. The other big fat lie is that they're going to pause on interest rate hikes. I think that they're going to have to continue that as we see oil prices going up each and every day, over $90 a barrel. I'm putting a forecast at over $120 a barrel over the next year. And as we all know, the core inflation, which is pulling out energy and food, it's basically useless. Energy and food drives the economy because each and every one of us, as we go to the pump to fill up our tanks, know the difference of what happened last year versus this year in energy costs. So again, this is news that the general market is missing out on and even not reporting on. Here's another one from Business Insider. U.S. households are on the brink with excess savings likely to be depleted by month end. This is what the San Francisco Fed is saying. Before we wrap up here, I want to let you know something. I truly believe that we're faced with a great opportunity. This could be one of those opportunities that only come once, maybe in 50 years. I've only seen it one other time. This could be one of the most incredible sell-offs in the market. While everyone seems to be fairly bullish, I still have my March 2020 lows in sight. Now, that may not happen right away. I don't think it will. But I do believe that once the sell-off begins, it could very well be shocking. Don't lose heart. We can make money on the way down. That's my plan. I believe that you can do great things. You may not believe that just yet. You may not have faith in your own ability to trade, but that's what we're here for. We're here to guide you along the way, help you with risk management, help you with entry points, help you with reading the charts. and I teach through repetition. Just like this video, each and every week I put it out in the weekly market report, and you'll be able to follow along through my repetition. I look at the price, I look at volume, I look at the oscillators, I look at the divergences from the moving averages, I look at gaps, and I look at pivot points, and I look at support and resistance levels. I do that each and every week. Follow along on our stickytrades.com website, and we will continue to surprise you with new services and products as we come out, and we plan on growing this YouTube channel as well. So thank you so much for liking, sharing, commenting, posting it on your social media pages, and I'll talk to you on the next video. So long.
Hey everyone, Jason here for Sticky Trades. No need for long intros, let's just dive right into it. Are you ready for an exciting offer? Well, we've got a quick promo video just for you, introducing our amazing free 15-day trial of stickytrades.com, the ultimate starter package that includes a full 15-day free trial period to enjoy and explore all the features and benefits. Join charting coach AJMonte every week for his #1 service rapid-fire weekly video covering 30 stocks in 45 minutes from you, the webinar guest, giving video covering stocks and options trading. Gain access to our university, where you can access a treasure trove of free training videos. And that is not all. By signing up today, you'll also get a fantastic bonus. How about a free 7-day trial of 2 revolutionary artificial intelligence bot trading platforms that we use, plus an exclusive offer of a 30-day free trial on SignalStack, an incredible automation platform that converts your alerts into real trades in your broker accounts. It's exciting, right? All of this and more can be found on our website, stickytrades.com. Don't wait any longer. Click the video or link below to head straight to the free sign-up area. So what are you waiting for? Click to sign up for free and start your journey to trading success with Sticky Trades.